All right, let's keep our eyes on these North American equity markets. It does continue to be a volatile day in the sense that we were up much higher on the Dow earlier, then we pulled back, and now we're trying to rally once again. So to make sense of the markets right now, let's bring in the chief market strategist at Agora Financial. That's Alan Nuckman. Alan, good to see you. Thank you for joining us. And describe to us what exactly is going on today. Thanks.
Well, today is just typical of what we've seen in all 2018, well, the second half of 2018 anyways, where we're giving back gains. It feels more painful than it actually is. Right now, we're actually positive in the major market indexes, but it just doesn't feel good to have a big gain like that go negative, just like we've seen with the stock market here in the last couple of weeks. Let's remember, it's only been a couple of months since the all-time forever highs in our stock indexes, and what we did was we gave back those gains to where we were essentially unchanged here before these last couple of sessions.
So what are investors talking about right now? And Alan, are you seeing people buy? Are you buying, or are you sitting on the sidelines? Because that seems to be how the market's being described by everybody. Everyone's sitting on the sidelines. There's no buyers, no bids.
Well, I don't think it's different this time. I've been very optimistic and very bullish for the past years and years. The fundamentals haven't changed significantly. It's just a psychology that's changed, and obviously that sentiment shift can be rather significant, and you've seen that rather quickly. But I'm looking for value. I'm an options trader. I look for options 3 to 6 months out, look to see how the markets can respond and recover. So I'm looking at some June option plays right now, looking to see if we can get some rebound in this market. One positive note that I want to bring up, we keep talking about this increased volatility, but actually numerically, we're seeing the VIX condense and is seeing a series of lower highs in the VIX, which is the volatility fear factor measure, and we're nowhere near where we were in February. Let's remember that VIX explosion was at 50. Right now we're at the 25 level. So volatility is actually half of what it was at that extreme. Now, at the same time, typically what you see when we look for a market reversal is that flash to the downside. You see the volatility increase and the markets reverse themselves. That happened 2 Mondays ago, but we didn't build on that, and yesterday we voided that pattern by making new relative lows. So something's got to give here. Typically, you like to see one extreme squeeze in the markets before they reverse themselves, and I don't feel that we've done that yet. It's been rather orderly to the downside.
What would cause, though, perhaps a squeeze to the upside? What would be a catalyst to get this market going?
Well, I don't know what the catalyst is going to be, but there's so many things, because in 2018, we've dealt with an unbelievable level of uncertainty. You know, you've got uncertainty with our politics, you've got uncertainty with our trade, and even uncertainty with rates. Now, that's going to come to an end tomorrow, so that's a big deal. There's a 75% chance that we're going to raise rates. Now, today, the president weighed in, whether he should or not, on thinking that they shouldn't raise rates. The Fed needs to be independent. They've done a great job over the last decade getting the market stabilized and where we were, and that's really another level of uncertainty, getting the president involved in interest rates. But if you look at the markets, there's going to be a hike tomorrow. Most likely, it was a done deal until just recently. And then after that, there are no rate hikes in the system all the way out until 2024. The market hasn't had any hikes. So that issue of uncertainty can be taken off the table, and that could be a sign of stability here in the future.
So why would it, though, be a sign of stability? Because right now, I mean, it isn't priced into the market. Nobody expects it. So I just don't know that it would give an added boost to the market.
Well, the markets right now are telling us there are going to be no more hikes. That was a big concern, if you remember back in March when we had the markets, take a dive, because interest rates, we had the 10-year yield going up to above 3%. So that was a big warning sign for a lot of people. Well, that never developed into being an issue, and actually in the last couple of weeks, we've seen interest rates come back down as things have gotten more normal, if I dare say that, as far as the relationships. Whereas we see the stock market sell off, you see flight to quality in gold, you see flight to quality in the treasuries. So things are starting to normalize there. But the concern that rates were going to rise was overriding everything. And even though we're still at very, very, very low levels, people were worried that the rate rise, reaction over the near term was going to hurt the market. So if you look out 2019, there's not any scenario where there's more than a 50% chance of us raising rates again. So I think that issue can be put aside, and that will give us a little bit more stability overall, and I think that could be helpful to the stock market.
How much of a factor, though, is the potential government shutdown weighing on investor sentiment? We've seen that before.
Well, unfortunately, Right. We've seen this movie before, unfortunately. I don't think it's that great of a deal, but combined with so many other issues of uncertainty where we can't seem to be governed properly here in America, I think that's starting to take its toll. And like I said, typically the markets want certainty. That's rule number one as a young trader, is that you want certainty from the government to help the markets do what they're going to do. And there are so many moving pieces now. It's so difficult to determine what's going to be, happening in the future. So companies can't forecast, traders can't forecast, investors can't forecast. But at the same time, let's look at this as a sale. A lot of these stocks are on sale. Half of the S&P 500 stocks are in bear market territory. So if people were looking for a time to step up and buy stocks that they liked, but they didn't like the fact that they were at highs, now, they're at a discount, but let's be aware, just like a holiday sale, they can always raise the discount level to be more of a discount. So you've got to be able to think longer term, and let's see how we respond in the next couple of weeks.
Well, what looks interesting, though, in terms of what's on sale, and where are you seeing the options trade? Like, what's an interesting option that you're watching right now?
Well, I like Morgan Stanley. The banks have been beaten up badly. So you look at the banks, they're down here on their lows for the last 52 weeks. Morgan Stanley is an investment bank. They make money from trading, so they would also benefit from this volatility as well. That's a stock that traded from 20 to 60 from 2016 up to those recent highs. Now we're at the 40 level. It's a halfway point. So I'm looking at the June 35 call. It's going to cost about $600. It's $5 in the money. So it's mostly intrinsic value. It's like buying the stock, but you're putting up much less money, and we're going to look to see if this stock can respond over the next 6 months and things can get better. So that's how I look to put risk reward in my favor. You've got something that's distressed and very much at a discount. So I think the banks could have a rebound as we get a little bit more normalcy.
And I only have about 30 seconds in this window, Alan. But talk about distress. What do you think of energy right now?
Yeah, energy's not something I want to grab just yet. It continues to drift lower. But if you look at crude oil in the big picture, crude oil traded between 40 and 60 in 2015, 16 and 17, and then 2018 broke out of that range. So we're really back to kind of normal trading range that we had for crude oil. Yes, it's given back a lot of gains. At some points, it's going to find some support, but don't try and be the hero and pick that bottom just yet.
Okay, we got it. Alan, good to see you. Thank you very much. If I don't speak to you, happy holidays.
Thank you for having me.
Thank you.
Thank you.
Thanks so much. That's Alan Nuckman. He's the Chief Market Strategist at Agora Financial. We're going to take a quick break and check back in on the markets just before the closing.